really a very targeted social justice issue. Immigrants that don't have Social Security and can't open bank accounts are generally the largest target of payday lenders. And they're not a very profitable group of people unless you exploit everything that they have. What you find when you go up the ladder is a lot of those payday lenders are owned by the same top banking institutions. But what you could do as a community or as a public bank is partner with credit unions to make sure that they're providing that service to people even though it's not profitable. It would be part of our upfront collective economic understanding to say we're going to pay $50 a month to this family or to this bank so that this family can bank with them. And instead that family doesn't have to do all the emergency changes that they might need to make in order to pay back a 200% loan. It doesn't hurt their credit so that they can't go and get a car when they might need to get a loan or even apply for their first house. So we're structuring, the hope is you're structuring a bank in a democratic way that's transparent and accountable, and where we as a community have a say in what is important to us, in what we pay for, and you can start to structure your society in a really community-oriented way.
If I rob a bank, should I specialize in private banks?
That would be nice, yes. I saw this really interesting cartoon that was someone robbing a bank, and behind the tellers were even bigger bank robbers. The banking industry took more money, I think I'm going to butcher it. Anyway, when they charge fees for people that don't have any money, it was like a $50 billion industry last year. So they took $50 billion from people who were at zero. Yes?
So are cities like San Jose, are they on board with getting a public bank? Or is it?
That's what we're working on. So we definitely have people in city council and supervisors that think this is a good idea. We have people that are more skeptical, right? It's a risk to say, we're going to restructure everything, pull out $1 billion of somewhere that, I mean, Santa Clara County has a AAA rating. They're doing really well financially. And to make a huge change for that is a risk that a politician who's looking for higher office may not be interested in.
Maybe a slow transition instead of a big one.
Well, $1 billion of $7 billion is kind of small, but certainly there are ways to ramp up the way you transition. And so framing that as part of our organization's hope when we go and talk to people is, what are their concerns? How do we build that into the business plan? How do we make what we're going forward something that lets them test the waters, feel comfortable, and slowly start to pull more money in?
So what's the biggest concerns on their mind now, the city and the county officials?
Just that it's new. I mean,
So Silicon Valley, everything we do is new.
except our politicians. They're kind of stuck in their ways. I mean, we've had people with concerns that this is going to create more work for the treasurer. And the treasurer has certain legal obligations that they have to abide by in order to take care of taxpaying money, taxpayer dollars. And if you make their job more complicated, then there adds risk to what you might happen. And there's always
complexity temporarily until the transition is done, or forever?
It depends on how you do it. Right? We have one treasurer, but as soon as you create a public bank, you have a bank CEO, you have a board, you have structures to help out. Right? As long as the bank was solvent and had a good business plan, it shouldn't affect the treasurer's job at all. Doesn't mean that they're not opposed to something new as well. Yes.
Sierra Club and other groups have approached some of the cities up and down the peninsula, and we've asked cities to divest from banks that are funding fossil fuel industry and funding climate change. And we've gotten feedback, Palo Alto and Sunnyvale and others, we can't take our money out of Chase, Citibank, Bank of America, Wells Fargo, and put it in a credit union because they don't, like you said earlier, they don't have the resources. You can't just take $500 million or $1 billion and put it in these small credit unions. But if we have regional banks, a county bank that's already got assets, might be from a pension fund, might be from city assets, it might not necessarily be the answer for you and me as a small account holder. In fact, it might not even be open to us as small account holders. It might be targeted towards the municipalities, but it would keep, instead of sending the interest payments to Wall Street banks, it keeps those funds here. So as Jake was saying, we can fund infrastructure we need, whether it's housing, education, transportation, parks, whatever it is, whatever we decide the local needs are. And it would be locally driven, meeting the needs of the community rather than sending the profits that we're paying. I think and Jake, you probably already know this number, from San Jose alone, or I'm sorry, from Santa Clara County alone, millions and millions of dollars in interest that is going to Wall Street banks that could be reinvested back in our own community, doing what we want to do. So instead of charging these exorbitant interest rates, a public bank can keep those rates low, reinvest the money locally, and do the community some good.
And this is an alternative way of doing funding other than bond measures too. It's
Bond measures
expensive.
and raising taxes, yes.
It's expensive to get a bond measure passed. So are they taking a look at the costs that are associated with that versus the costs that would be associated with the complexity of getting this off the ground and making a comparison, or are they just...
It would be nice. We're not really at that granular stage. We're still convincing people that this is worth researching, that this is worth starting to develop a business plan so that you start to look at those numbers. And that in and of itself is a challenge to do in a year. Right? So that's the hope.
Was the first step to get some sort of a resolution to get kind of commit to a study?
Yes. And a study might not even be necessary. Right? Studies have come out of Oakland, out of Seattle, out of San Francisco that say this is profitable, this is stable, there are ways to do this. So the first ask for us might be study these studies and then come up with a plan yourself. And that's more a faster way to do it, where you leverage work that people have already done. Yeah.
Am I glad I'm gonna kick off in a couple of years and have
No,
nothing
you're
to do
not.
with this crap?
You're gonna show up here 10 years and interrupt the conversation. I know that.
Yeah, the last thing, to Brian's point, I think we spend about $157 million a year as a county in debt services and fees. So that's what we lose to pay off bonds and to pay fees to banks that handle our money. And so as soon as you can internalize a lot of that right away and use that money to start the bank or to pay the employees of the bank, it becomes profitable very quickly and stable really quickly, especially when you get to choose how much money you put into this to start, and then the capacity for growth is really strong. Are there any other questions? Yes?
First, I'd like to thank Brian for introducing me to this topic last year. And second, you mentioned that you found some support among San Jose City Council and Santa Clara Board of Supervisors. Could you mention who the supporters are?
Yeah, so we've had Sergio Jimenez be very strongly supportive, as well as Ash Kalra. They have worked pretty closely together for quite a while. Don Rocha, before he left City Council, was also a big proponent for us. That was really helpful, and he's moved on to work at the county, so he's still someone that we're working with. And then we've had some good discussions with people in Supervisor Chavez's office. We've reached out to almost everybody in the county. We have reached out to everybody in the county, and so they're aware of this now. We've gone through the county commission process. We got approval of a resolution through the Commission for Consumer Affairs on the basis that they know predatory lending has been a problem, that they know poor lending practices have hurt homeowners in Santa Clara County. It's something they're put forward. So we're driving a few different avenues. It's been tougher on the city council side. Right? City of San Jose has 11 voting members, and there's 10 council districts and the mayor, whereas the county's only 5. So some of it's how do we get things moving quickly so that we can build momentum? If the county passes a resolution, the city's going to see it. The state's going to see it. That's what the resolution would say if it were up to me, is we resolve that the city of San Jose should look at this, the state should start to address this in a legislative way, and that we will start to do our due diligence to make sure that this is ready to go forward when it's appropriate.
Certainly seems like something that Civilian would be interested in. Can you speak about the differences and advantages of a public bank over a private, not-for-profit bank like Beneficial Bank?
Yeah, so the first thing, we've talked with Civilian staff, and that's been an interesting discussion. He actually was one of the few people in 2011, the state legislature, both houses, House and Senate, passed a resolution to start a state bank feasibility study. And it was vetoed by Jared Brown. Civilian was one of the few people to abstain from that vote. So we're still working with what the distinctions are between a state bank, between local banks, how they're run. North Dakota is not a progressive state. They don't really care about the environment the same way our California legislature might. In reality, the North Dakota bank loaned money so that the state could hire policemen from out of state to brutalize the protesters of Standing Rock. That's a way a public bank, if not held accountable, can do bad things. Right? Money is neutral. So that brings me to the difference between a for-profit but socially conscious entity or nonprofit is how do you hold it accountable, right? Even a credit union or a nonprofit, they have their own boards, their own selection process, their own way of determining which direction they go as a company. And a lot of the times, because they're nonprofits, they tend to grab people that have their heart in the right spot. But if they didn't, and there's a myriad of nonprofits out there that have had huge corruption scandals, and we don't have the same accountability tools that we would have if it was a democratic structure.
Would you say this public bank would have its own board as well?
Right. And how that board gets appointed is up to us as well. Are we electing the CEO on the ballot? Are we ensuring that there is diversity and representation on that board? Does the charter of this bank say you need 51% women and you need to represent the diversity of the community, whether that's 30% Hispanic, whether that's one LGBTQ member? Those are things that we need to make sure are done right. We're starting a new democratic institution. We know the democratic institutions have their own problems. Right? The city of Santa Clara is being sued for how they run their elections. So it's not something that is going to go totally clean and awesome if we just say, go ahead, start a bank and hands off. This is us as a community getting involved in democracy and in the creation of money in the way that our society chooses how to grow.
Because the charter could dictate some of that stuff in a way that any sort of a nonprofit or for-profit bank would not have control over.
Correct. And where people discuss what's in that charter is also kind of up to us as a community. If I desperately want zero fossil fuel investment in the charter for our public bank, someone in the city might not think that that's appropriate. Or maybe 6 people might not think that's appropriate. So do you then pull that out of the charter, but make sure the democracy is there where every time they want to invest in something that has a fossil fuel aspect, the community's there, right? And some of that is political strategy. Can we get in first and make our lives easier in the future? That would be awesome.
If you have too many of these public banks, wouldn't that dilute the source, which are all the people? Is there an optimum number of citizens for a public bank? Like 50,000, some such number in a community?
It's more about size from money, right? You have to be a certain size in order to be self-sustaining, right? If you only have $10 and you want to hire somebody to loan out $10, you're going to have a lot of trouble paying them.
In other words, say the city of Sunnyvale, would that be large enough to support a public bank?
I'm not a banker, but I've been told no. So even the county of Santa Cruz, they're speculating through their conversation with people that are in banking and finance. The county of Santa Cruz is not big enough to do their own public bank.
Right.
They would like to partner with us. And so there's still an optimum size, but I don't have the financial expertise to give you a number or to tell you what. I just know that cities like Sunnyvale also don't necessarily need this option. Palo Alto has $250,000 in like 11 banks. So that's fairly manageable if your job as the treasurer to make sure that that's what's going on. $250,000 is the FDIC insured amount.
How much money would you need for a bank? 250,000 to set up a bank?
No.
That's nothing.
Relative to what the bank can make, the setup cost of it is
Enough
nothing.
people to put up 250,000
Yeah.
to make a public bank.
And fortunately, creating a bank nowadays is really cheap. Especially, depends on how you do it. If you need ATMs, that costs money. But if you can do everything online and then partner with credit unions that already have existing ATMs, you need one office in the back of the county and 6 employees, right? So your startup cost is really legislative, legal, and employee. And then maybe renting a space if the county doesn't have a room for 6 people somewhere. So there's ways to do it in a really inexpensive way, there's ways to do it in an expensive way.
So with the Oakland and Seattle and stuff, is there enough information in those studies to be able to base a small study of those studies and go out and start a pilot?
We, within the California public banking lines, believe so. But public entities are traditionally very risk averse as well. So they still might want to take a really long look. And in some cases, it's a way to divert political attention. So there's a lot of political strategy involved that says, you know what, go create a feasibility study, it kicks the can down the road 6 months till I'm out of office, and I don't have to make that decision.
That's why a pilot is more strong than a feasibility study. It's like,
Right.
we're going to take the small amount, small risk, we're going to give it a try, let it prove itself, things go well, then we can expect.
Yeah. So, yes.
I just want to ask, I guess maybe you're not at this discussion yet. Is it going to be open to small businesses or all kinds of businesses? Because if we have people lining up waiting to divest, but they don't have anywhere to divest to, it seems like once this bank is open, this bank's going to just explode. To me, all of a sudden, all these people banking with Wells Fargo or VA, all of a sudden people are going to say, these companies that really want to divest that haven't been able to or whatever, because we're even seeing ads on Facebook for little e-banks now popping up.
Yeah, I mean, individually, there are places to divest today and yesterday and tomorrow, right? So it's not necessarily that we have a bunch of people waiting for this public bank to be created, but we do have some cities. So Seattle voted to divest. They approved their divestment from Wells Fargo, and they looked around and they figured out they didn't have anywhere else to put it, so they went to Chase. And that's because there's collateralization and capitalization requirements that mean if you're moving $1 billion, you have to move it into an entity that can hold $1 billion at a certain level of risk that's appropriate for taxpayer dollars. And so the way to start public banking, while it can open up to providing services to individuals, is really pulling a large upfront amount of money from an institution that can't do anything else, that is backed into a corner, right? We can go to credit unions.
that could help them, it's just.
There's some, not in Seattle, I think in California, there's some cities that are medium-sized that have been able to do like a statewide community bank kind of thing. But for scales of billions of dollars, it's not something credit unions usually can take on.
And just to finish up that thought, so the goal of this is not for individuals primarily, again, it's for big institutions, keeping the investments here locally. If you, 350 Silicon Valley and other groups, we sponsor Move Your Money workshops, where we teach you how to transition your money out of Wells Fargo, out of Chase, out of Citibank, out of Bank of America, and into local, generally credit union type thing, community banks. And there's one coming up at Congregation Beth Am on February 27th, so I can give you some information on that.
Okay, yes, please, thank you.
2679 West Dakota.
Yeah. So that's about it. I mean, creation of money, in my opinion, is a public utility. We let private companies do this just by having a certain law on the books, and I believe we need to put some democracy back in that.
How about printing 20s on an HP copy?
It's a bit smaller scale than I'm talking about, but it might be.
I've done that, they're very good. You mind what?
Anyway, thank you all very much.
Thank you.